Today on Forbes, Elon Musk is running out of ideas to save Tesla. This past week, Tesla posted its worst quarterly results in 4 years. Sales were down 9%. Income plummeted 71%, hurt by a 20% drop in automotive revenues. And given tariffs and rocky market headaches, the company didn't bother giving sales targets for the rest of the year. But the stock rallied as investors cheered one thing. Elon Musk says he'll soon step back from his duties gutting the federal government through Doge and return to running the show at Tesla in a more full-time capacity, accepting his other responsibilities at SpaceX, XAI, and Neuralink. However, that's not the cure-all investors seem to think it is. The problems Tesla now faces have been exacerbated by Musk joining the Trump administration as a special government employee. Those problems include declining profit margins, intensifying competition, and a tarnished brand image. And they show no signs of disappearing anytime soon, even if Musk becomes a more active CEO again. Worse, it's becoming clear Musk has run out of ideas for how to fix them, instead fixating on an uncertain future focused on robotaxis and humanoid robots. For now, Tesla profits from selling cars and battery storage systems, and both businesses are in trouble. It has no successor to monster sellers like the Model Y and Model 3. At the same time, it's about to get hit by President Trump's tariffs, which are expected to chill auto sales across the industry. Worse for Tesla, though, a coming 145% tariff on imported Chinese battery cells is set to hammer the company's battery pack business, one of the only bright spots last quarter. Musk downplayed these problems on the April 22nd results call. He said, quote, "We're not on the ragged edge of death, not even close. There are some challenges, and I expect that. There will probably be some unexpected bumps this year." Some of those bumps, though, are entirely expected. Though Musk's political activities have been more time-consuming since Trump returned to office on January 20th, aided by $250 million from the world's richest person, his embrace of right-wing politics and inflammatory social media comments have tarnished Tesla's brand image for well over a year, particularly in important markets like California and Europe. Multiple polls, including one by Marquette University Law School this month, found that 60% of people surveyed had an unfavorable view of Musk and 58% disapproved of his Doge work. A YouGov Yahoo News survey last month found that 67% of Americans would not consider buying or leasing a Tesla, with most saying Musk was the reason. The most pressing challenge for Tesla is reversing the decline in its EV sales, down 13% in the first quarter. More alarming is that automotive revenue dropped 20%, meaning it sold fewer vehicles and charged less for them. The entirety of its $409 million profit came from regulatory credits, free money it gets from other automakers to comply with pollution rules in the US, California, and the EU. Without the $595 million in credits Tesla sold in the quarter, it would have posted a net loss. The simplest, most obvious fix for ailing sales is a new model. Rather than doing that, however, Musk and his engineers are readying refreshed and cheaper versions of the Y and 3, which went on sale in 2020 and 2017, respectively. Rather than doing what traditional automakers call a so-called full model change, where the body shape and interior are dramatically altered, the 2025 Model Y is more of a refresh of the 2024 version, with a new light bar running across the front hood and rear sections, sleeker headlights, and more aerodynamic wheels. That could provide a jolt to sales, but it's not a winning long-term strategy. There's a reason why car companies regularly release new models. Dramatic styling changes typically produce better results, according to industry researcher Glenn Mercer, who leads Cleveland-based advisory firm GM Automotive. Neither Musk nor Lars Moravy, Tesla's head of vehicle engineering, shared details of how the company planned to offer the cheaper variants on the earnings call. Industry analysts expect Tesla to do this by using a smaller, cheaper battery pack with less driving range and eliminating tech features. For full coverage, check out Alan Owensman's piece on Forbes.com. This is Kieran Meadows from Forbes.